On May 8th, we published a video on our channel which had something to do with the title of Bubble About to Burst. And this was referring mainly to the cryptocurrency markets at the time. At the time, Bitcoin was at around 58,000. We'd filmed that video, I think, 2 days earlier, something like that. And by May 19th, the market hit a bottom, or the Bitcoin rather, hit a bottom of 30,000. By May 23rd, the altcoins more or less hit what is at this point in time their bottom. And some people woke up with, up to, some people mentioned to me, 8 figures off of their net worth. So not so good. I wanted to take some time today and discuss how it is that I successfully called what was going to happen there, because a lot of people didn't. A lot of people, actually it was kind of emotionally unsettling for me at the time, because before anything happened, people were telling me that I was, probably crazy and, didn't have enough durability and wasn't confident enough and, things like this. So anyway, we're going to cover that today. It's going to be exciting. I'm going to cover how that might apply to future investing decisions, as well as future decisions looking at kind of this mental model of how to predict what's going to happen in different areas. And I think it's something that people very often get wrong, so we're going to cover it. Before we do that, welcome. I'm Michael. This is Offshore Citizen. If you need help with international structuring for yourself personally or your business, you want to pay lower taxes, get residencies, citizenships, open bank accounts, form companies, all those things, please reach out to me. You can book a call, calendly.com/Michael-Rosmer, link in the description below. Or you can check out our websites, offshorecitizen.net, offshorecapitalist.com, send us a message through there. And if you haven't already, please hit the subscribe button, nail the notification bell, hit the all to notifications. We really appreciate your support, trying to produce great content for you every day. Well, let's dive into it. Okay, so during this little crash, which I'd uncharacteristically in that video said, hey, maybe cash was a good thing to be holding at the time. Turned out to be a good call. And I've gotten remarkably lucky on a bunch of my calls over the last year or so. Last summer, when Bitcoin was at around 7,000, I was busy telling people, hey, listen, you should buy a portion of Bitcoin with a portion of your portfolio. Turned out to work out pretty well. Start of December, I mentioned DeFi, and I mentioned some of the projects that I was investing in. Turned out to be pretty good. This one turns out to have been pretty good. So I'm getting luckier than I deserve, and I do want to emphasize with you that as much as I do think I think that what I'm going to share is actually a useful mental model and something that will help to increase your probability of prediction. The reality is I am far from an oracle, and I'm probably luckier than I deserve to be in these particular situations, but that's okay. I will take it. So there was no way that I could have said exactly when things were going to drop. It was possible that things went up and that I was wrong. And there was no way that I could say specifically how far down it would go. There was some technical analysis you could do that kind of give you a few guidelines. So for me, it was 42,000 and then 30,000. But it was certainly uncertain, right? There was a degree of ambiguity to what was going to happen there. So with that context in mind, how did I look at the market and how did I kind of predict this, right? I was looking at something, so let's set some context. The context is what a lot of people said in the news is exactly the bullshit that causes them to make mistakes and miss opportunities like this, right? So I know all kinds of people who didn't sell, right? Who were holding and woke up and they were down 50%, they were down 60%, they were down 80%, whatever the number was, right? And those people often would say, oh, it was Elon Musk tweeting. Oh, it was China news. Oh, it was something that the Treasury said, whatever, right? Some piece of news. And what I would consistently say to those people is that is bullshit. That has nothing to do with it. Or it's not that it has nothing to do with it, it's that you're confusing 2 key concepts. And these are the concepts I want to focus on for this video, which is the concept of causation and catalyst. Okay, so you might be familiar with the distinction between correlation and causation. What is the much less discussed contrast is between causation and catalyst, okay? And here's kind of the evidence for that. So there was no way for me to know on May 8th or May 6th or whenever it was I actually filmed the video that Elon would tweet, 10 or 12 days later that Tesla is no longer going to be accepting Bitcoins for the payment in the purchase of vehicles. Right? No way for me to know. No way for me to know. In fact, Elon might not have known that, right? No way for me to know that China was going to release their news that they did about, basically banning these things and kind of kicking that off. So in that environment, if you say, okay, then how could he possibly have called this when it was impossible to know the news in the future? And the way is simply to realize that the news didn't cause the problem. The news simply acted as a catalyst for a structurally unstable system, okay? And this is the thing that I want to focus on. This is like the key takeaway from this point. So what did I mention at the time? At the time I said the risk to reward was no longer attractive, right? That was kind of my statement. And I said, hey, listen, I think you're better off being in things where the risk to reward is attractive. Now, when the risk to reward is no longer attractive, what happens in a market? You have people who already have made a lot of money who are taking profits, right? And one of the things that I was observing, a data point, was I was talking to significant clients who had been in the space for a long time, who had a lot of money, who were saying, hey, listen, the market's looking toppy to me, and I'm taking profits out. I don't need the money. I'm already up a lot. No big deal. So they're taking profits. Well, what is that doing? That's creating selling pressure amongst people who traditionally hold when things are stable, or when things are like, through turbulence, right? At the same time, what was I seeing? I was seeing a situation where people who had no idea what they were talking about at all were jumping into the space, right? I had people calling me up who I haven't talked to really ever about investing, who have, $1,000 to invest, who are saying, hey, listen, I should jump into this thing. And I'm like, oh my God, this is terrifying, right? When you're thinking about what happens in late market cycles, what happens? You get euphoria, you get a lot of people who have no idea what they're doing, buying in, right? You get insane valuations, and you get this thing that I'm going to talk about in a minute, which is micro caps start dropping off. And I saw all of those things happening, right? Instagram models are tattooing Doge on their ass. Dogecoin, which is a nothing project, like there's literally nothing to it. Somebody will tell me like, oh, well, there's like talk that Amazon might use it for payments. Come on, guys. This is the story you're rationalizing to justify what's happening. And by the way, there's this really common thing, be aware of it, which is that people will backwards rationalize stories to justify price action, okay? So for instance, I saw this, like major YouTubers posting videos because Ethereum Classic was pumping and saying, hey, is there something to this Ethereum Classic thing? No, there's nothing to the Ethereum Classic thing. You're in an insane stage of the market cycle when Bitcoin Gold, which is a nothing project, pumps 50% in a day. That's a bad sign, right? You might sit there and say, oh yeah, this is great, we're making all this money. You should be terrified. At least I was terrified, okay? Number two, you have things like Dogecoin, this Shiba coin. What else was going on there? Cumrocket, even you just think about that name, it was up like 2,500% in 7 days. You have projects are debuting with just these ridiculous valuations that make no sense in the world. And some people, they don't seem to be able to contextualize how to make sense of valuations. So a valuation is kind of like just a number to them, okay? So it's like, the example that I use is Tesla, right? Tesla became worth more than the entire automotive industry combined. And I'll hear people telling this story, but it's like, yeah, but it's really more of a software company. It can go up, it could be a $4 trillion company. Really, how? Where are the profits going to come from? If the entire profits of all the entire industry combined came together, which meant no other company made any money, and Tesla made all the money from all the car companies, you were talking about Tesla being overvalued on a price-earnings ratio relative to these others, okay? Now, we're not going to get into Tesla because, yes, there are arguments that, okay, there's solar and there's some other things like this, but that only goes so far, right? Basically, you can just kind of look at market size and you can say, hey, listen, let's contextualize this. Let's realize that the entire US stock market, I think actually the entire global stock market is something like $45 trillion or something. So if you're sitting there saying, hey, listen, this one asset can go up to $10 trillion, not really, right? Like there's only so much money. The money has to come from somewhere. And it's true that over a period of time, money could flow in from other asset classes. So for example, I think one of the more bullish reasons to support Bitcoin is that a lot of money is going to flow out of bonds and into Bitcoin because it just doesn't make sense to hold bonds anymore. This being said, that process is going to take quite a while. And the bigger something gets, the more inflated that bubble is, the more money needs to come in order to push it to the next level of inflation, right? So What did I see? I saw valuations were ridiculous. They made no sense. Not necessarily in Bitcoin, right? Like you could pick key coins and you could say, okay, hang on, is Aave overpriced? Aave pumped, by the way, at the end. No, maybe not. Is Ethereum overpriced? Maybe not. Again, Ethereum pumped at the end. Is Chainlink overpriced? Maybe not. There's some of these you can go through and you can say, okay, maybe you can rationalize their valuations, right? But for sure, a whole host of projects, they're nothing projects. We're going nuts, right? That's not proper. That's not normal. That's not healthy for a market. Number two, you have people who know what they're doing who are selling out, right? Not a good sign. Number three, you have people who have no idea what they're doing getting in. And I'll talk in a second about like how that's relevant. Number four, you had a situation where Bitcoin was struggling to make new highs. This was concerning, right? I was just kind of like looking like, why are we not getting these parabolic run-ups anymore? We're getting like, basically the rate of growth was decreasing rather than increasing, which is exactly the opposite of what you would expect in some sort of a parabolic run-up. We did see that in Dogecoin and some of these others. The last one is I was holding quite a variety of different assets, ranging from strong projects like Chainlink down to very small projects with a few $1 million market cap. And what I started seeing was the small guys started dropping off. This is a very end of market or top of market type behavior. Okay. And by the way, I'm not necessarily saying that the market isn't going to recover or whatever. That's a whole other conversation, whether we're going to see some sort of second wave or something later on in the year. That's a whole other conversation. But what you'll notice is late in market cycles, you'll have this, basically what happens typically is you've got good projects that will start to pump. Okay, great. So they do well. And as they do well, money chases yield, right? So we say, okay, well this one, there's the upside here. So I'm going to go into increasingly risky assets. And as I go into increasingly risky assets, those are going to pump, right? But then towards the end, mostly what you're going to have is you're going to have money's going to cycle back into the less risky assets because their perceived risk to reward has changed, right? And you'll get, yes, some that will still pump off that are just crazy stupidity, right? Which is basically what we're seeing with something like Shiba Coin and stuff like this. But by and large, you see that, and this is exactly what we saw happening here. So for me, as soon as I started seeing my small cap ones who, as we get later in the cycle, I would expect to be pumping, dropping off, I was like, ooh, this is a terrifying sign. This is a sign that this is like a leading indicator, okay? And so that's something just to be aware of is, the flood is going to come, there's major players that are going to drop off at the end, which was exactly what happened here. And even like if you look at something like Matic, Matic had a really, really strong rebound. It bottomed on May 23rd and it went up most of the way back up in the subsequent few days. It's kind of since gone down a bit and it's kind of going sideways. But you get that in the space, okay? So this is something that's really, really important. So now let's talk about this catalyst versus cause thing. The way that I kind of liken it and try to understand it is like a Jenga tower, okay? So if you have a Jenga tower, what's going on? You have this tower and people are pulling out blocks and putting them at the top. And each time you pull out a block, you make the tower less and less stable, right? When this happens, after a certain amount of time, it becomes very apparent that, hey, the tower is unstable, right? And once you've identified that the tower is unstable, you don't have to be a genius to say, hey, it's probably going to collapse soon, right? You don't have to be able to identify, and you probably can't identify, who the exact player will be who will cause it to fall, right? The inaccurate way of looking at it would be, somebody is going to eventually pull a brick and that tower is going to come down. Would be to say, oh, that person knocked the tower down. But it's not really accurate, right? That person was the catalyst for the tower falling down, but really the structurally unstable nature of the system was what caused it to collapse. And it could have been any catalyst, right? Any person could have pulled that same brick and it probably would have fallen. Okay, barring somebody has a little bit more finesse with it. That's the same concept here. And so I would recommend that you be very, very cautious about the value that you attribute to news and recognize that markets will respond differently to news depending on what the structural stability of the market is. Okay, so when you get a very fragile system, then that system is likely to explode from any catalyst, right? If you have a situation where you have a very stable system, then it's not likely to respond negatively in either case. And in fact, you can to some extent judge where you're at in the cycle based on how things respond to news. If you get good news and things go up, that tells you something. If you get good news and it doesn't go up, then that's generally a bad thing, right? If you get bad news and things don't go down, that's generally telling you you're close to the bottom. So there's this expression, like some people tend to think, oh, hey, the market collapses on bad news. Actually, the opposite is true. The market tends to peak on good news and tends to bottom on bad news, right? So when the bad news starts driving it down, you know you're probably at the bottom. When the good news stops driving it up, you know you're probably at the top. This kind of behavior, right? So that is worth understanding. Now, why do I give this? Because I think the same structural concept of thinking about systems and thinking about fragility, as opposed to focusing on individual catalysts, is useful in helping us to predict what's going to happen in countries, in where we should move, in where we want to get a bank account, in so on and so forth, right? There's these leading indicators that show us, hey, something is wrong here, right? And when that something is, if there's something wrong, we probably should get out. And on the flip side, there are leading indicators that tell us, wow, something's working here. Something's right here. We should probably get in, right? And so, yeah, that's the mental model, is just to think of these catalysts, think of structural stability or fragility, and using that to kind of predict. And there's just indicators of, hey, listen, what sorts of things make this concerning? If you're in a situation when you're in markets and you have people who are sophisticated investors or people who are believers, et cetera, and they're pulling money out, and you have people who don't know what they're doing, who are going in based on hype, the people who jump in late based on hype are going to be the first ones to sell. And so they're going to be most responsive to things like negative news, right? So when China says something, or Elon says something, or you even get price action to the negative, those are going to be the first people to sell. And when they sell, that can create a cascading effect, which is more or less what we saw here. Now, there's some other things you can get into, and you can have the argument of, hey, listen, to what extent were some people coordinating, driving the prices down, and to what extent were things initiated by China, or not by China, but by Chinese miners selling. There's some things that you can say that compounded it. But it's interesting that you didn't need to predict that. You didn't need to know anything about that in order to predict what ultimately happened. And again, you can't necessarily predict exactly when it's going to happen, et cetera, but it is useful to understand things from that perspective. So I hope that's helpful. We'd love to hear what you think about it. Would love to hear if you have some observations of, hey, listen, here's an area where the systems seem really stable and robust and flourishing, and there's signs of growth, versus, hey, here's some examples of where there's some really weak ones, whether that's countries or investments or opportunities or whatever. We'd love to hear from you. If you have any questions, please put them in the comments below. And I'm going to look forward to seeing you guys on the next video.